Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. We'll also get you expert views as to how should you be really approaching your investments in equities as of now. Where are the pockets where you can actually hope for handsome returns from in this current market scenario? We'll get you all of that, but first up, a quick check on how the markets are doing as we've begun the last half an hour of trade. Well, 95 points up for the Sensex right now, 61,856 the current level. It's slightly up in trade, definitely off the low point of the day, but not a very substantial move on the upside, but definitely a recovery from the lowest point. 18,296 the current level for the Nifty. It's up by about 30 odd points. The broader market's doing well, and also if you talk about the overall sectoral index moves, you do see a mixed reaction with most of the stocks or the sectors in fact up in the green. Ranging from the sectors starting from, say, the auto space. You do have even the banks now turning green, financial services. You do have FMCG that's holding up, still strong, half odd percent higher. Media stocks doing well as well. Apart from this, it's the private banks that are holding steady. The realty stocks also up by half odd percent in this current market. But what's actually keeping the lid on the markets and the movement on the upside? Clearly, the PSU banks that have been looking at some kind of a pressure, 1.5% down for that one. Metals declining a bit as well, about 0.4% odd. IT stocks down by quarter odd percent as well. But time now to see what kind of views do our experts really have as far as the markets are looking like right now. Mr. G. Chokalingam now joins in. He's the founder of Economics. Welcome, Mr. Chokalingam, and thank you so much for taking the time out for this discussion. Well, we were looking at steady upward momentum in the markets after a long haul. Especially April turned out to be a good month for the markets. How do you really look at the current texture in the markets? Are we on course to really retest the all-time high levels, or is it still some time away?
Uh, it is sometime away, but definitely not beyond a couple of months. The concern for the market on domestic front, it's one, the Karnataka election, which is going on today. The second, the rate cycle in the US. Now, according to me, whatever is the outcome in the Karnataka state election, it is not going to change the direction of the market because Karnataka state accounts for only 5% of the total Lok Sabha seats, whereas in the current regime, the ruling party has about 11-12% additional Lok Sabha seats as compared to the simple majority. So, therefore, the outcome would not impact, and also the objective of state assembly election is different from the Lok Sabha election, and hence the market participant would not get deterred by the outcome. The second, on the rate cycle, I am sure we are at the close of the rate cycle. It has to peak out with maybe another 25 basis point, or in worst case, maximum 50 basis point. Then it should start peaking out and then start declining as well. So these developments might take a month or so. After that, I see the Indian domestic market hitting a new record high. I am extremely bullish on the market in the short term, at least for next 6 months.
Okay, but you are definitely positive on markets touching record high levels in the calendar year 2023?
Absolutely, much before. The only risk to my view are two. By any chance, oil, starts booming, oil price. Second, if there is any war in Taiwan, these are the possible risk factors. But oil is already down close to 40% from 52-week high. I don't see any major threat in oil in the short term. Another kind of reason which we have to worry on possible war in Asia. But again, there I have a view that since all the major players in the world have a bomb, what Mr. Abdul Kalam said, I believe in it, that would act as a deterrent for the war. So therefore, I am not unduly worried about major risk factors in the short to medium term.
Okay, understood that. Well, in this current sphere of the markets, then how are you advising investors to approach? Is it a market where one should go all out, or one should actually look for just stock-specific opportunities? What is the best way?
So the best research strategy, which I always keep sharing with investors, is that never borrow money and put it in the stock market, and never put all your money in the small and mid cap. Because once in 3 years, small cap, mid cap, they fall very badly and destroy wealth. And that is a space which also creates wealth once in 3-4 years. but very difficult to predict their peak and bottom. So therefore, our research strategy, which is almost permanent, is that you put minimum 30% of your financial, wealth meant for the equity asset in Sensex and Nifty stocks. If you are very conservative, up to 50%, you put it in the top 250 stocks, what we call institutional stocks. The balance 250 stocks, you put it in the small and mid caps, where you look at the management quality, the leveraging, any working capital crisis, and then valuation comfort. Without compromising on that, you put it. Now, particularly, I believe it is a time for small caps to outperform Sensex and Nifty in the next 6 months. I see a phenomenal wealth creation opportunities in the small cap space for the next 6 months' time.
Exactly, that's what I was coming to. I mean, looking at this overall market, is there any particular space which you believe that could emerge as dark horse? Since you did mention that the small caps that you really believe could outperform, even in the months of April, what we have seen is that while the markets was gaining its mojo after 4 months of being in a tight range, small and mid caps really raced ahead of the benchmark indices as well. And it's the small cap index, 100 index, that actually rose by 7.5% in the month of April. What is the kind of opportunities that you think that investors can actually look for in the small cap space?
Yes. If you look at the BSE B group share, which are primarily small caps, the market cap peaked in FY22 at around 15.5 lakh crore rupees. Right now it is 11.5 lakh. Still it is down about 26%. As I said earlier, once in 3 years they show a tremendous jump. So therefore the recovery is possible. And secondly, large cap stocks are generally identified with the major sectors like automobile, cement, telecom, oil and gas. And we know, except the banking sector or one or two more sectors like FMCG and the capital goods, many sectors are either stagnating or growing in a poor single digit. So considering these two facts, I find a lot of opportunity in the small cap because they are sector agnostic largely, not totally. What I mean is there are many disaggregated business models. Like you have a paper packaging companies, say for example JK Paper, which is a paper packaging company, and you have a lot of solar power, companies in the small cap space. So just to give an example, so like this at the disaggregated level, there are different, diversified products and services companies in the small scale to look at, and therefore I believe in the next 6 months, specific themes within this small cap can play out in a big way. So one could be packaging paper, second could be the solar power module producers or solar power merchant power generator. These are the examples of small cap theme which can play out in a very big way in the next 6 months' time.
Okay, any particular names that you'd like to suggest from these particular themes that you are bullish on?
Certainly, I don't mind sharing. One is Swalac Energy. Just as a disclosure, we also invested personally through economics. This is only for high risk taking people because it's a very small cap stock. It has got 100 megawatt of solar power. It has got multiple manufacturing plants. The complete integrated player in solar module manufacturing, costing to the supply of solar module. And also recently it has officially updated on exchange that they are going for a big expansion. So this is one stock, with a downside risk of possible risk of around 10-15%, but it can give a phenomenal return. As I mentioned earlier, JK Paper, I like it very much. We don't own JK Paper, but we have officially recommended this stock. It's around 5 PE, and they recently expanded the capacity. They acquired a 2 packaging paper unit, and these are the 2 stocks. Apart from that, in the large mid cap, I would strongly recommend Tata Power. It's moving away from the coal-based power to more on renewable energy, and March result also excellent. I believe that Tata Power is in a right track to emerge as a renewable energy dominant player in the country in the next 3 to 5 years. So therefore, one can consider Tata Power. It's a very safe stock, Tata Group, and also it's a very large mid-cap stock. So these are the 3 stocks one can consider.
Okay. Mr. Chuklangam, we are almost moving towards the fag end of the earnings season as well. What exactly did you make of the earnings season so far? Anything that stood out for you as a theme, as a sector, or as a particular stock as well?
Yeah. So one sector which all of us know has done phenomenally well is the banking sector, because the credit growth of the banking industry is at the record high level, 10-year record high level. At the same time, the net NPA has come down to nearly 10-year low level, and the credit growth is over 15%. This is a space which has done extremely well, and I believe last few days it has corrected, but it could be an opportunity to acquire, because I believe there is a lot more stream left in this, because we are hitting the peak of the interest rate cycle. Inflation started moderating substantially, and also the IMD has forecast normal monsoon. All this augur well for the banking space. So we have seen excellent results like Bank of Maharashtra. That is the one stock I've been saying that, in terms of quality, not in terms of size or stock price, in terms
Right.
of quality, it looks like a mini HDFC Bank, Bank of Maharashtra. So that is one stock one can consider. Otherwise, in the results, I see a lot of struggle. You also know that many sectors are growing their profits only in the poor single digit.
Mm-hmm.
And therefore, you can look at small IT stocks. They are also struggling. But since
Yeah.
because IT space is growing in poor single digit, there is a possibility of merger and acquisition theme once again played out in a big way. If you look back for last 10 years, just before COVID pandemic era, a lot of stock companies were acquired. Since all the large companies are struggling to grow and they are not able to grow in double digit and growing their business in four single digit, and at the same time they are sitting on a lot of cash, free
Hmm.
cash. I see, once again the acquisition theme playing out in a big way.
Yeah.
So I'm forecasting that the companies which I'm mentioning would be taken over, but I'm saying that as and when the merger and acquisition plays out, the small IT stocks valuation multiple will improve. So therefore, one can look at a stock like Gensar, Sasken, where we are also personally invested through economics in Gensar technology. So this is the second theme we are very bullish,
Okay.
small and mid cap space.
Okay. One more question that I had was on the new age tech companies as well. We did see Paytm earnings coming about. What did you read through in the numbers? We did see a sharp reaction as well on the stock. In fact, a week before also we were talking about it. From that time until now, we've seen Paytm really, rallying about 100 rupees or so in this span of just 1 week's time. Even today, it's up by 2.8%. Anything that is structurally changing in this space for some of the stocks, if not all?
No, I may be wrong. I think the structure of the markets and the economy are not in favor of these new age companies to come on this kind of valuation. In fact, I have been negative on these companies ever since they went for IPO post listing. The day they got listed, I have been negative. Very
Yeah.
simple reason that the manufacturing today accounts for only 17% of the India GDP. So today the Indian economy, Indian young people, they depend heavily on service sector for income generation as well as for job creation. So what I mean to say is that there's going to be tremendous competition within this e-commerce space, which are basically banking on the digital space. And it's going to be very tough to, make a lot of profit and justify the current valuations. I think 5 year or 10 year down the line, what they are going to make is already in price. That is my strong view. So every rise I would use to exit the new age or e-commerce companies, rather than banking on these new age companies which are not making a decent profit. I would bank on something like a Reliance industry,
Hmm.
which is getting into new age business through various
Yeah.
verticals, and it is emerging as an economy. Reliance itself is emerging as a mini economy.
Sure.
It is integrating all the business verticals, using the technology. So I would rather recommend a strong buy on Reliance industry rather than these e-commerce companies.
In fact, if you've spoken about Reliance Industries, I'll take a little further this discussion. We've also seen JP Morgan come out with its report, believing that there is still a 20% upside potential on the stock. And as the company has already recovered about 13.6% odd from its 52-week low levels, they still are overweight on the stock with a target price of 29.60. And, of course, you did talk about the potentials of the demerger and, getting into the new forays into the companies as well. Your own sense of what kind of targets can one expect going forward? If somebody is a very long-term investor, is it still the right time to start building on their shares or accumulating the shares at this point in time?
Certainly. I am a big fan of Reliance industry. I personally do not own. In fact, I would not give 20% return. I would give 100% return in the next 4 to 5 years. Mine is based on the understanding of economics and the business models of Reliance and also their past experience. All of us know the way they have multiplied the revenue base and profit base of, the telecom as well as retail business. Yeah, phenomenal achievement. Now they are getting into renewable energy, green energy. They are getting into FMCG. You name anything, media and financial services, and it's emerging like a mini economy in itself. So having proven itself the capability to scale up the business, I'm pretty confident that in all the new businesses they would be able to scale up, and in 4 to 5 years Reliance would be a mini economy. Its size would be comparable to any small states in India, not only in terms of size, in terms of diversification across sectors. Now look at FMCG, the smartest strategy they are adopting. They are acquiring all small, decades old brands, and instead of burning money, the way some of these PE funds are burnt in e-commerce, these people are spending very small money but acquiring decades old popular brands, and they are banking on them to promote the business of FMCG product. So these kind of well thought out smart strategies going to create a big size for Reliance industry. So I would say that one should hold on to buy, continue to buy and hold on the stock for 4 to 5 years. And my target is doubling of this price in 4 to 5 years. The only risk factor, if there is any war in Asia, or if there's any economic crisis or political crisis, then those things would act as a major risk factor. But otherwise, according to me, in the index stocks, Reliance Industries is the best stock to depend for the long term.
Okay, understood that. Well, thank you so much, Mr. Chokalingam, for being with us on the show and discussing with us various insights on several topics, sectors and stocks that we've discussed. Thank you so much for giving us all that wisdom and all our viewers as well. And with that, let's quickly look at how the markets are trading. Well, they have picked up pace even further. Just about 11 minutes remaining for the markets to shut shop, but still it's up by about 0.3%. On 18,317 currently the level for the Nifty. It's inched up higher, 50 points up. In trade right now, the Sensex also up by 180 odd points, 61,940 currently the level for the Sensex as well. Will the markets end in the green? Yes, believe so. But will they end up with handsome gains in today's trading session? We'll keep an eye. So do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Until then, thanks for tuning in.
The two startups which